The last time we were at these kind of levels was in the 1940s.
I think the sort of wild card as we look to that election is how strong the performance of the AfD will be. They're benefiting from free advertising via Elon Musk. If you're asking voters to swallow some short-term pain for longer-term gain, and that is a political problem. No doubt the tariffs will be coming Europe's way.
We know that Europe needs a crisis to really change. Welcome to another edition of What's Brewing with Matt and Guy. Once again, Matt, we've got a lot to speak about. I guess you've been a busy boy the last few days, given there's a certain new president who's been busy himself.
Yeah, it's been a bit of shock and awe, the start of Trump 2.0.
Were you more shocked or were you more awed?
I was neither shocked nor awed.
Wow.
I think a few surprises if you had read the Republican platform going into November's presidential election. They're just working through the priorities that they'd identified and which just over 50% of the US voting public voted for.
Yeah.
So no big shocks on the policy front. And in terms of the rhetoric, the way in which these initiatives are being launched, whether it's trade, whether it's migration, whichever one of these executive orders you want to focus on, it's strong echoes of the way President Trump handled things back in his first term.
Well, whatever you think, as you implied, he's been consistent in terms of the issues that he identified, whether it's immigration, whether it's about tariffs. He appears at least to be trying to deliver so far.
Exactly. I think he's doing what it said on the tin, to borrow a phrase. And from a policy perspective, there are no initiatives that weren't flagged in advance. Now, that doesn't mean that there aren't going to be consequences and there aren't sort of broader geopolitical ramifications of what's being pushed through at the moment. And also, I suspect some market implications, not least when we see perhaps a bit more shock from the markets in terms of tariffs on Canada and Mexico, which were there briefly, now have been postponed again, but will hove back into view by the end of February.
You know, from a market perspective, it was interesting because we had the inauguration day and we didn't really get the shock and awe. So the markets actually took that quite positively. Maybe this was a slightly more constrained Mr. Trump coming back into the presidency. But I think, as we've just been speaking about, that only a few days go by before we have this flurry of executive order. But do you think that it's just, it's still rhetoric, or do you think now we're going to be in a position where these policies are going to be delivered and that the tariffs will be put in place, even though we've seen this pause from the 25% on Mexico and Canada?
Look, I think it's difficult to tell because any trade war requires two to tango. And we've seen the first moves from the US side, but I'm not sure it's entirely clear how other actors are going to behave here. I mean, we've seen a targeted response from China already, and that will presumably have some consequences for some sectors in the US. We know that the Canadians have lined up a set of targeted responses if required. So look, you need both sides to be happy with the deal that's reached if it's going to stick. I think it's too early to say with confidence how this is going to play out. But the overall playbook here does seem to be, start aggressively, then come to the table and try and negotiate a deal. That seems to be what the current US administration is looking to achieve. And others will be factoring that into their own approaches to negotiations. And one assumes that for all the actors here, whether it's Mexico, Canada, the EU, who will be next in the frame, I'm sure, the incentives are there for them to think about what the basis of a deal could look like.
Well, I mean, just on that, because I think, again, that's what we, and I think the financial markets broadly, are hoping for. We know it's always a dangerous word, hope, in financial markets, but the hope is that we see a scaling back in reality of what actually bites. I think there's a feeling that, yes, tariffs are going to go up, but maybe not by the amount that has been, I guess, flagged. I mean, to put this in some kind of perspective, if you look at the 25% in both Canada and Mexico, plus the 10% on China, I mean, these three countries make up more than 40% of US imports. And what's interesting, if you look at these numbers, that would take the effective tariff rate in the US up from about 2.5% today to closer to 10%. And to put that in perspective, the last time we were at these kind of levels was in the 1940s. And you and I have mentioned in the past that these kind of restrictive measures, going back to that period in history, it wasn't a good time for anybody. So I think there is this hope: start hard and negotiate lower. But we have to wait and see.
So, Guy, Europe hasn't yet had its moment in the tariff sun, if you like. They'll be watching carefully what's been going on between US and its closest neighbours, Canada and Mexico. But no doubt the tariffs will be coming Europe's way. And they've got time now to think about their response to that. I guess there are two angles. One level is thinking what Europe can do to boost its own competitiveness and work out how it can prosper in a world where it's less dependent on the US for trade and for defence, potentially. The other will be looking at what it can put on the table to try and buy off President Trump, the sort of deal that can be done. So it looks like that will be some mix of gas, guns and cars that the Europeans will need to buy more American of. Is that going to be sufficient? Do you think Europe is going to be able to dodge the bullet on trade tariffs?
I think they have the ability to dodge a bullet. As you say, the crosshairs are clearly lining up on Europe. I mean, one thing to get out of the way right at the beginning, of course, President Trump's quick to point out the trade surplus that Europe runs with the United States. Of course, there is a deficit in terms of services. In other words, of course, Europe buys more services from the US than it exports. So again, that's something that should be remembered. And if that were factored in or netted off against the trade part, it would reduce it by about a third. So it's always bearing in mind that actually there's a two-way process here. So I think Europe still has some negotiating power, but as you said, I think what they're going to end up facing is there will be some increase, I suspect, in terms of the tariffs, but there will be some agreements reached, and we've already seen talk of this, whether it's buying, as you say, liquefied natural gas, which is needed, and a bit more in defense spending, which is also needed. So you could argue there'll be a solution found. But I think, when you think about it from Mr. Trump's perspective, he needs to show that he really has some teeth and he's not all talk. So I do suspect there's going to be some tariffs put on Europe. But look, we know that Europe needs a crisis to really change. We know about the Draghi report. We know what needs to change in Europe. We just keep waiting for it to change in Europe. Have you got any signs from the politics and the discussions that's happening in Europe that we're on the cusp of some change? Are you a bit more optimistic? Is this whole kind of crisis causing a catalyst for change?
So I'm sure you saw the competitiveness compass that was published at the back end of January by the European Commission, which in true European form was a multi-page document with dozens of proposals and promised pieces of legislation that are going to solve the competitiveness challenges that Europe faces. Now, look, at one level, it's easy to be cynical and say, we see this each commission that comes around, it's a long list of legislation, very little evidence from past experience that legislation delivers growth or competitiveness. But I think this time around there is a different level of ambition. And I think the potential for political support from big European member states is perhaps in a different place than it's been previously. And let's assume that they only get 30% of the legislative initiatives moving that they've set out in that proposal. I mean, these are big fundamental changes to the way that European capital markets operate potentially, the way in which companies law is applied within Europe, and the ideas of a 28th regime, possibilities for new funding mechanisms. I mean, these could really start to change the dial, or at least perceptions of how European competitiveness is going to evolve. So you can make a case.
There is a toolkit there, I think, as you rightly point out. Perhaps there's now a bit more urgency to do that. So from your side, what would you be looking at first to say, actually, this time is different? Is there anything, any piece of legislation, anything that you would say, actually, this is a different Europe we're beginning to see come through?
So look, there's a lot of noise around the so-called Omnibus Directive, which is this deregulatory initiative or simplification initiative that the Commission is coming up with. That will generate an awful lot of noise, but I think is potentially the least interesting element of the competitiveness compass. I mean, that is really Europe running to stand still. They're just unpicking all of the regs that they've spent the last 4 years carefully crafting. So, not a great advert for competitiveness. Where I think it's more interesting to focus is on the Clean Industrial Deal, which is the infrastructure that needs to be put in place to reduce energy costs and to move forward with the energy transition in Europe. Now, if they can really make progress there, that does change calculations around how competitive European manufacturing, for instance, is. And I think that will be an interesting one to watch. Can they get political momentum there? Can they get member states on board? The Capital Markets Union is the sort of ever-present promise of removing barriers to trade and capital across borders in Europe.
I was a young lad with short trousers when this was first, spoken about.
It was black and white, right? This is many years. So far, very, very limited progress, but I think you're starting to hear noises from, in particular, Paris and Berlin, making much clearer their support for action in this space, and particularly a focus on ensuring banking and financial services in Europe is able to compete with the US. And to the point that you made earlier, I think one other area that features prominently in the competitiveness compass that the Europeans published at the end of January is the need to drive investment into AI, but also crucially to encourage European companies to adopt AI.
Yeah.
And there was a McKinsey report published at the start of the year that had an eye-catching figure in it, which is the average European company is spending 3,000 euros less per capita on AI than their US competitors.
Isn't it?
And if that continues over time, you've got to assume that productivity growth is going to carry on going ahead full steam in the US, and there's going to be a problem in Europe. Now, there are various initiatives within the competitiveness compass which point to trying to encourage both development of AI within Europe, so the sort of AI startups and equivalents of OpenAI, etc., onshore, but also to look at how they can encourage European companies to invest. And that's not easy. It's difficult to do that from Brussels. But again, if they can pull it off, then I think it starts to make a real difference.
Well, let's see. I mean, again, we know the springboards are there, but we need the deliverables. And that's something, again, the US is very good at, and Europe, frankly, and let's be honest, is not so good at. I mean, one thing I look at is the financial markets. And it is fair to say that certainly the European equity markets have been doing better this year and at the end of last year. So I suspect there's two things. One is that, expectations have been so low. And perhaps two, some of the things that you've mentioned, there's at least the potential for some of this to be delivered on. Let's hope they do deliver. Let's hope we don't have another year of being underwhelmed and giving that competitive edge once more to the US.
So, Guy, one upcoming event that I guess might help reset expectations around Europe's future growth path is the election in Germany that we're going to see at the end of February. So, Olaf Scholz, current Chancellor, called this election himself. Doesn't look like he's going to win it. No. Friedrich Merz, the CDU challenger, is still the favourite, but it's a volatile political picture. How are markets, how are investors looking at this? Is this a key event on your calendar for 2025?
Well, it's interesting. When Scholz called the election, I think there was an optimism in financial markets thinking this could be the catalyst for change that was needed. But the reality is, I think, as we've got closer to the election, some of that hope is faded a little bit. There will be change that is needed, but whether it's significant enough really to catalyze Germany, I'm doubtful of. But how do you see it? Are you more optimistic about this?
Yeah, I think it will herald a change in political direction in Germany, or at least it will ungum some of the blockages that are there at the moment on the current coalition being able to act. So I think there is a definite upside. We assume that there will be, at the moment, current polling, a three-party coalition is the most likely outcome. possible still that CDU may get enough vote share to be able to get away with a two-party coalition. But either way, I think the political challenge for that coalition is very clear. Yeah. They'll need to focus on a way of working around the debt brake, which is at the moment really preventing Germany from playing the role it needs to in pumping cash into the defense of Ukraine, but also looking at creative ways to pump prime other growth initiatives.
Yeah,
exactly. So,
but I mean, Merz has a bit more personality. With a coalition, though, will that be enough to really make a difference? My suspicion is, for example, the debt brake will be tweaked, but not altered to the extent to repurpose Germany. But I could be wrong.
Look, I think it's always a safe bet in the German context that compromise will be the outcome. Yeah. I think the sort of wild card as we look to that election is how strong the performance of the AfD will be. And they're benefiting from free advertising via Elon Musk and his X channel. They are riding high in the polls, north of 20%. And that really is something new in the German context. And I think for me, you take a step back and look at Europe more broadly, what this does is remind us that the populist challenge hasn't gone away. No, and that complicates politics and it makes political choices harder. We see the same thing happening in the UK with reform, riding high in the polls, looking like the main challengers to the Labour government. That's a government that's trying to push through exactly the same set of policies that European 27 know they need to drive ahead. It's reset expectations around growth. But all the time, you've got the populists champing at your heels and potentially peeling votes away from you if you're asking voters to swallow some short-term pain for longer-term gain. And that is a political problem.
So listen, we've got a lot to watch out. Again, we said this. The good news for us is that we've got no shortage of topics to discuss. So thank you again for joining us. Remember to like and subscribe and see you again very soon.